This is Business Talk. Your business, your success with Peg and Pete. Sponsored by McBurley LLC. The opinions expressed are those of the participants and may not be the views of the staff, advertisers, and owners of the station. Advice given is not intended to replace that of your business advisor. Now, let's get down to talking about your business, your success. It's Business Talk with Peg and Pete.
Well, good afternoon. We're here today. Peg and I are with Bill Jacob from Bottom Line CPA. Welcome, Bill.
Good morning.
Welcome, Bill. It is so great to be back here today. And last week we didn't get to have a guest. I interviewed Pete last week.
You did, didn't you?
Pete, did you like my interview?
That was great. That was great. We're doing that again.
Oh, I enjoyed that so much. I did. I enjoyed that, and I hope that we did get some responses from our listeners. We want to say thank you for your calls and your emails because the subject matter was really good, and we did a case study last week, and it worked out real well. And
today we're going to talk about some financial things, and welcome, Bill. Glad you're here. And Bill is our accountant, and we want to talk to you business owners about how your business can prosper and some of the things you need to look out for, things you can do that'll help you and things to avoid.
Well, and before we even get there, I have to tell you.
Yes.
Pete and I are so lucky to get to work with so many different business owners. And one of the number one things when we walk into a business we see is that they need a new accountant. And the reason is because they're not getting their financials on time. The accountant's like, oh, I'll get to that next quarter. So how can we make decisions without having that done? Or they've been inaccurate, or you're paying penalties. There's so many things. And that's why Bill, you're the only accountant that we trust enough to get on the air because there's you got to really shop.
Well, that's very kind of you. I'm sure there's a lot of great accountants out there, but it is true. And if we're not careful, we'll get trapped by the issues of compliance rather than issues of financial literacy. So those compliance deadlines can sometimes be a trap, and we get this myopic sort of tunnel vision. So it's very important that we remember that the client's business is 365 days a year, and we have to pay attention to that, and we have to be ready to respond.
So hitting the quarterly deadlines, those are all important,
certainly,
but it's not enough.
Certainly, absolutely not enough.
Okay.
So first, before we get into some of I think you have some fascinating stories that we get to share with our audience today. How did you get to where you are now? How did you become an accountant?
Well, I have to tell you, in my case, it's probably the reverse. This is a second career for me. So I spent over a decade in the printing industry, and finally decided what I wanted to be when I grew up. So I became a CPA and have been doing this now for 18 years.
After the printing?
Yes.
Wow.
Yes.
Were you doing the numbers when you owned the printing company?
Not directly, but I worked with our family accountant, very talented individual, and opened my eyes to matters of financial literacy. So finally, I went back to school after graduate school.
Oh my!
Took the necessary courses to pass the CPA exam.
Great.
And I've been a CPA ever since. And
Great.
I think, once again, that's the reverse. I think, unfortunately, a lot of accountants take it in college. They go to work for a big firm, and they spend the rest of their career trying to get out of the business. So in my case, I'm here because I want to be here.
Oh,
well, that's
good.
great. And the thing that you have, too, is that you've been a business owner. So you know a lot of what our clients and other business owners are going through.
Yes, definitely. It's I sometimes call it the plight of the self-employed. So it's important to understand, empathize, and realize, really, it can be a lonely existence because as a business owner, there's very few folks who understand what you're going through, the risks you're taking, the stress, and so it's important to understand.
That's funny, Bill. What you just said is what we see, too, is we walk into a company and the employees don't understand the risk that you are taking.
Right.
And most times, if you're not sharing your numbers or you're not allowing them the communication of what's really happening, they do believe you're making millions of dollars when you've probably not taken a paycheck for a few months.
Or haven't gone on vacation for a few years.
Yes.
Those kind of things.
Well, I can tell you, I sort of warned myself as we got together for this afternoon's program that I did not want to talk too much about numbers, but I will share with you a few as we go along on some interesting percentages and things like that. People really have no comprehension. And that goes back to this issue of financial literacy. You have to go into this with your eyes wide open because we want success, right? I mean, we want you to succeed.
Right?
Okay, so Bill, if I'm a business owner or manager, I'm listening to this and going, "Oh my gosh, I don't want to listen because you're making me nervous." It means I have to know
I'm
my
turning
number.
the station.
I'm turning the station. Don't turn the station.
You're not allowed
Wait.
to touch that dial. Don't touch that dial.
What would you say to them? What would you say to these people that are really nervous about knowing their numbers?
I suppose they're already nervous, right? I mean, they're
Right.
nervous before they tuned in. So our plan is not to make them more nervous, but to actually provide them the necessary tools so that they can reduce the risk, reduce their nervousness, and actually get back to enjoying what it is about this career that they chose.
Sometimes they think they may be more comfortable not knowing what the numbers are, when in fact usually it calms you down a little bit if you know a little bit more about the real health of the business.
I certainly believe that's the case.
Interesting. Okay.
The analogy we like to use is if you walked onto a plane. We're going on vacation soon. When you walk onto the plane and you look into the cockpit and the two pilots are talking to each other and they're going, "Gee, I wonder what all these dials and gauges are. What is all this stuff? Would you still get on the plane?"
Exactly.
So you want to know what your cash flow is and,
Yep.
and what your accounts receivable number are and how quickly are people paying you and what your percentages of various things. So we want to know those things.
Yeah, it's absolutely necessary. I mean, we need cash flow. We do not want crash flow. So let's
Crash flow.
Crash flow.
let's make sure that we're successful in
Right,
pursuing
exactly.
financial performance and ultimately financial freedom.
So where would you start, Bill, as far as our audience and telling them some of the musts, some of the first things they should be looking for, some of the things that
Foundational type things.
that you have a client in front of you. What are some of the pieces of advice you give to them?
Well, probably the two biggest issues that people don't plan for is that they don't budget for taxes and they don't budget for debt. So those are two things that typically don't appear on the income statement. The income statement is the one everyone's comfortable with, right? We look at revenue, we look at expenses, and we look to see if we've got a positive bottom line.
You look at that bottom line and get all excited when you see a number that you like down there or a percentage that you like.
And what are some other words for income statement for those of us that are listening?
Profit and loss statement, statement of revenues and expenses, income statement, they're all
P&L.
P&L, they all are the same thing.
Now, those of you who are not CPAs, we want to make sure that we have at least 3 different names for the exact same thing, right?
That's the thing we got to keep saying. 'Cause
least.
I get that asked a lot. Of wait, what is profit margin? Wait, what is because there are so many different words that.
Right. I can tell you one of the interesting phenomenons. I taught a class to it was through Otterbein, as a matter of fact. It was a four credit class, and it was for non-traditional students. So we were putting together the materials, and we weren't finding the book and test materials that we wanted to use. So we had to come up with a lot of it ourselves. Long story short is we were going into the first day of class. The dean was with me, and the students in the class, they were all using the right terminology. And at the break, I told the dean, I said, "We're going to have to change the program. These guys are way ahead of us. We've got to start from scratch."
Go a higher level.
Yeah, a little stress kicked in. But after the break, we had a quiz, and the test scores were not good. And so what I suggest to you is people have learned the buzzwords, but they haven't really learned what they mean. They haven't really learned how to apply them.
Okay.
So that's something I try to be cognizant of.
Maybe we could do just a little bit right now.
Well, you mentioned, Bill, that there's one statement that most business owners, and maybe they don't look at it every month at least, but they hopefully look at their profit and loss statement once a month.
Right.
What are the other 2 things they need to look at?
Well, certainly the balance sheet is important, and they will look at that once in a while, maybe once a month, right? The cash flow statement is possibly the most important statement, and they may never look at that.
I have
The way
to tell you,
we
they
like to
don't,
look at it is the profit and loss statement is theoretical, and the cash flow statement is what's really happening.
Sure. And someday, maybe next time we get together, we'll talk about the difference between accrual and cash statements. But it's absolutely critical that folks look at where the cash is going.
Great.
So hopefully there are profits, and if there are profits, where are those profits going? Because let's face it, there's at least three groups that have claims on your profits. Hopefully you, the owner, has a claim on those profits, but most certainly the banker has a claim on those profits to pay back the debt. and the IRS has claim on those profits to pay the taxes. So, and those are non-trivial balances. So once again, I think for financial success, for financial performance, you're going to have to make sure you budget for debt and taxes.
Great. So lesson 1, we want to look at profit and loss statement, balance sheet, and statement of cash flows.
And then lesson 2 is make sure you budget for taxes and debt.
Right. I think that's where you're looking at issues of
that's when people get in
financial
trouble.
Literacy and financial performance.
So debt payments and
when you
taxes.
say taxes, are you talking all taxes like payroll tax, quarterly taxes, or is there anything else?
Yes, absolutely.
All withholdings.
Absolutely. I mean, and that's the thing a lot of folks don't understand. I mean, a business owner is faced with, everything from from federal income taxes, state income taxes, city income taxes, school district income taxes,
workers' comp,
state unemployment,
SSA.
federal unemployment, Social Security, Medicare. Right? These are this is a great pile
and sales
of
tax.
Taxes, certainly, right?
It adds up to real money
have
after
you
a
ever
while.
run into that where they're not budgeting for sales tax? Where they don't take out the sales tax? Have you ever run into that?
It happens once in a while. That's something that is easily corrected. But where they get into trouble is when they will use those collected sales taxes to fund their operation.
Yes.
Right.
Oh,
So
sure.
this is an agency relationship that the employer takes on with the taxing authorities. Right.
You're an agent of the government collecting these taxes.
I think it's unfortunate. I don't think it should
Unpaid,
be the way it is.
we should mention.
I mean, it's another level of risk, right? Because at the end of the day, if you don't pay your taxes, they take your house.
Yeah, they're serious about that tax thing, aren't they?
And they don't take IOUs.
That's a sort of serious thing. We can't get around that.
Yeah,
okay.
and I digress, I suppose, for a moment, but I will mention that do not rely on these commercials you hear on the television, late night television, or the radio where they talk about
tax relief,
tax resolution. Yeah,
yes.
I mean, I'll give you a for instance. A taxpayer came to our office. He hadn't filed his taxes in 5 years.
Oh my gosh!
He had an IRS notice. He owed $100,000. Okay. At the end of the day, we put his tax returns together. We prepared it. He owed $2,000. Is it right for me to say that I got him a $98,000 tax relief? I don't think so. I mean, at the end of the day, he just hadn't filed them. The IRS sent a threatening letter.
Right.
It got him to respond, certainly.
Yeah.
But he only owed $2,000. So in my opinion, it's not like we reduced his taxes. All we did was file his tax returns so he could pay what he actually owed. So I think they're misleading because they do give the false impression that people can actually, run footloose and fancy free and end up getting a big discount on their tax bill.
They do.
And that's not the case.
Right.
They do. Oh my goodness.
Good.
Gosh, that went so quick. I just love having you here, Bill, because the neat part about having Bill, and if you just tuned in, Bill is, we're interviewing him with Business Talk on, and he's our accountant, and he's just helping you as business owners on some do's and don'ts. But you make it simple.
And Bill, your company is Bottom Line CPA, right? And how could they
Correct.
get in touch with you if someone is interested and would like to talk to you or your company?
Well, certainly our web address is bottomlinecpa.com.
Okay.
Our blog address is bottomlineblog.com. You're certainly welcome to call our office and talk to any of our tax accountants or CPAs. Phone number 614-408-8354.
That's great.
And what was that again?
614-408-8354.
You're so good at that, Peg.
I
That's
do
great.
love it.
Yes.
We sound like an infomercial. Well, we'll be back and dig into some case studies, some more case studies. Thanks, Bill.
Look forward to it.
Great.
Could your business use some help? Call 602-5189 to schedule your coaching session. 602-5189. Now, back to Peg and Pete.
And good afternoon. And we have with us today Bill Jacob with Bottom Line CPA firm. Thanks for joining us, Bill.
Thank you.
And for our listeners, we want to invite you to a workshop that we're holding. Bill has been kind enough to allow some free passes, some complimentary tickets for those of you who call in. What you'll see, Bill, why don't you tell us a little bit about the workshop that you're giving and when and the timing of that?
We've titled it "Flying Without a Net" in praise of private business owners, and I think whether you're in business already, whether you're a spouse of a business owner, whether you're contemplating owning a business or whether you want a better understanding for the business you work for, I'd highly encourage everyone to attend. It's going to be on Tuesday, July 23rd from 8:30 until 10 in the morning. Registration probably starts around 8 o'clock.
Yes.
So I encourage everyone to sign up, call Peg and Pete, and make arrangements to attend. This is going to be a fun event. It's going to be approached without, we're not going to have any complex spreadsheets to review. It's going to be some fun graphics that are going to talk about the components of, really pursuing financial literacy, financial performance, and financial freedom, because I think those are the things that make a difference for the business owner, for those trying to
So tell us those again. Financial literacy, financial performance, and financial freedom. Great.
So we're going to be talking about that. It's an hour-and-a-half workshop. Call us at 602-5189, and that's 614. So it's 614-602-5189.
That's it.
And leave us your name and number, because more than likely what happens is when you're calling in, sometimes you'll get our voicemail versus us answering it. So leave your name and number, and we'll get back to you. Tell us how many tickets you would like.
Right. And if you like, you could email at PeteMcDowell@actioncoach.com.
And what was that again, Pete?
Pete McDowell at actioncoach.com.
Perfect.
I thought I already said that.
I know. It's almost like an echo. Well, Bill, we want to just dive right into a little bit more of what we were talking about before we had the break on business owners and some of the things you've learned. What would be one thing as you met business owners? Like I like what you just said before the break. If you just tuned in, Bill was giving an example of sometimes people get fearful of taxes and they come in and it's in those late night infomercials might be misleading of what you're able to do for somebody.
Certainly, and our goal, and I think any accountant's goal that's really working on the best interest of their client, is so that they eliminate surprises, right? I mean, you want to know what your tax liability is, just like you want to know what your liabilities are to pay your vendors, your
employees, et cetera.
Exactly.
Right, sure.
So it's important to have that knowledge, I think. And I think as long as we as accountants don't get bogged down just focused on the deadlines, we can really look at a company's bottom line performance and get everyone prepared for the obligations of the business.
I like what you just said, Pete. Doesn't that sound so funny? I just don't want any surprises. That's all you say all the time.
I do.
Pete says, all I want is an accountant that gives me no surprises.
Right. Let's pay things on time. Let's have the money set aside
Absolutely,
each week or each month
the
for our
deadlines.
future expenses, because you generally know whether it's an insurance payment you make twice a year or taxes you pay quarterly. These things shouldn't be surprises.
That's right. That's why I say the deadline is the easy thing, right? I mean, it's determining the liability that I think brings the real value. Give you a heads up so you can plan accordingly.
Right.
And let's face it, I think what people forget is even a bigger factor than taxes is planning for debt. So it's important that people make their debt service payments and realize those. It's surprising to me how many experienced business owners forget that debt is not deductible, right? I mean, we didn't pay tax on it when it flowed into the company, so we don't get to take a deduction for it when it flows out of the company.
Darn.
That's right, and it's unfortunately it's a big. It's a big number.
Well, and the other thing that we see occasionally, and in the last couple of years, we haven't seen it as much as we had a few years before that, is that if you get out and you're probably not going to do this when you get back, if you're in your car, when you get back to your office, is pull out that loan document from the bank and actually read the thing and see the covenants in there.
Absolutely.
There are things in there you need to make sure that you pay things on time, and you need to be up to date with the financial statements and
That's right.
Those covenants can be used to stop the loan.
Right. There's no question that the banks probably have the best attorneys in the world drafting those documents, and they're designed to completely protect the bank. So let's remember that the banker is not real. He's not a partner, right? He or she is not a partner with you. This is your business. You're responsible for those obligations, and they're manageable. I mean, they're things that you can do to be financially successful, and that's
if
what
we plan ahead.
For. Right, absolutely. Absolutely.
Got it. What would be a case study or lesson learned in a business, whether it was your own business or somebody that you've seen that would be good to share?
I think a good one at the moment might be the case where people are looking at buying a business. And
great. Okay.
I will tell you that too often businesses are overvalued.
Okay.
And I think until you budget for the debt and taxes, it's really not evident that you may be overpaying for a business. And they'll tell you whether you're investing in a business or stocks or whatever the case might be, right? You make money when you buy, right? So let's not fail right out of the gate. Okay. And so we're going to talk about that in the workshop. We're going to use a few quick examples. But you can imagine that once you buy a business, I'm talking about even a normal transaction. I'm not talking about anything obscene here. A normal transaction, 67% of the cash flow can be consumed by debt for years after the purchase.
Oh, really?
That's a big number.
That is a big number.
Yeah.
Right.
How many years do you see? Like 10 years? Or?
Well, yeah, I would say depending on the business, depending on whether real estate's involved, 7, 10, plus years are going to be the payback period.
And you're seeing people not budget for that.
That's right.
So most people, you may get a formal business valuation done. What else could you do to reduce the chances of paying too much for a business?
I think run through those cash flows, get comfortable with the financial performance of the business, what it looks like before, right? I mean, let's face it, typically businesses are bought by folks who are retirement-minded, guys and gals that have been in the business for years. Maybe their debt is paid off. The bottom line looks healthy, looks reasonable.
Right.
But the buyers typically younger. They're looking for a change from their W-2 employment history, and they want to pursue something that they have a passion for. And if they don't budget correctly, then of course we have that situation we talked about before. We're pursuing crash flow instead of cash flow, and I think cash flow is so important. I mean, profit has become a dirty word. And if there was one thing we could talk about today, I think it would be maybe the demonization of private business owners, right? I mean, I think you'll see YouTube videos about how profit should be outlawed and things like that. And I'm telling you, it's profit that pays the debt. It's profit that pays the taxes. It's profit that provides for increases for future employees.
Investment.
Retirement plans, et cetera. That's where the money comes from.
Are you seeing business owners think it's a bad thing for profit? Or just employees?
No, I think society in general.
Society.
And so really, unfortunately, business owners are swimming upstream, right? I mean, because like you said earlier, I mean, everyone thinks the business owner's making, $1 million, when in fact, as you guys see, being familiar with numbers like you are, and as we see every day, it's
They're
not
making
uncommon.
less than you think.
Yes, absolutely, and it's not uncommon that they have employees that make more money than the business owner does.
The
And
other
certainly,
thing we
when you
see
spread it
is-
over time, that happens more often than you'd think.
We see people that have relationship issues and health issues and all kinds of other issues, in addition to financial challenges that people don't understand how much stress you can be under.
That's right. I mean, for instance, and that's why we entitled that workshop coming up on July 23rd is Flying Without a Net. People don't realize sole proprietors, partners in a partnership, there's no safety net. There's no unemployment available for them if the business doesn't succeed.
Right.
I mean,
it has to succeed.
It has to succeed. And unfortunately, too often it does not. And I'm afraid that's what I talk about when I say that businesses are demonized and we don't appreciate the risk that the business owner takes.
And if you just tuned in real quick, let me tell you, this is Peg and Pete with Business Talk. We're talking with Bill Jacob from Bottom Line CPAs, and he's talking to us as business owners and owners and managers of what we can do to help our businesses thrive. Bill has graciously allowed us to have some complimentary tickets for his upcoming workshop that we are working with him. We're partnering with him. And it's, when is it, Tuesday, July 23rd?
It is July 23rd on Tuesday from 8:30 to 10, and it's called Flying Without a Net, in praise of private business owners. And you want to call us at 614-602-5189, 614-602-5189, and register with us. Leave your name and number on the voicemail, and we'll get you a ticket. So going back to potentially buying a business, what are some of the things that a good analysis would entail? So let's say your sister is going to go buy a business. What would you make sure that she did before she actually wrote that check or signed those documents? As we talked about before, it's easy to take a look at revenues and expenses. Right. Typically, that information is well disclosed on the tax return. What you don't see, though, is what happens on the balance sheet. What you don't see is whether
those profits were generated simply by selling off inventory? Was the cash that was in the bank account simply traded for accounts receivable? What we want to look at is, can the business service the debt that you're going to incur going into this new venture? Now, let me give you, for instance, I served as the endorsed local provider for the Dave Ramsey program when it came to tax and accounting services, and everyone knows that that good radio cannot too often be by hearing the train wreck stories, and so whether it's personal debt or business debt, these are things we're interested in helping people with. So, and I know that's what you guys do every day. You're helping people succeed in their business. You're helping them achieve the goals they set for themselves, and it's so important. And as in having attended those seminars, I know that these folks need to take a serious look at their financials, take a serious look at their financial performance. And one thing we're going to do when we attend that workshop on July 23rd is take a look at the balance sheet in different ways, right? Too often we look at it just numerically. Let's look at it maybe in shapes, sizes, colors. Let's take a whole new look at how a balance sheet might make more sense to people.
And first off, let's look at it.
Absolutely.
That's a good point. Oh, this is going to be a great workshop, Bill. This
it's going to be fun.
See.
So you're talking about when you are purchasing a business, you do want to look at tax returns. You do want to look at a valuation if you can get a formal one done, or hire someone to do a good, solid, formal business valuation. But you also are talking about doing projections.
Sure.
Based on the information you have, looking out into the future to say, okay, when we add this purchase of the business, which will incur debt, are we going to be able to take care of that debt in the next 10 years?
Exactly.
Great.
That's something everybody's missing, which is, okay, that's good. This is really good.
Your website and phone number again, Bill, if you could give us that.
Website is bottomlinecpa.com. Our phone number is 614-408-8354.
Wonderful. Thank you.
Could your business use some help? Call 602-5189 to schedule your coaching session. 602-5189. Now, back to Peg and Pete.
Well, good afternoon. Peg and I are here with Bill Jacob for Bottom Line CPA, and we're talking about a workshop that we have coming up that Bill is going to be speaking to business owners about, and this is on July 23rd from 8:30 to 10. And just give us a call or an email to get registered. And let's go back to this talk about financial statements and purchasing a business, Bill, and give us an example of what someone had done correctly and how did that work out for them.
I'll give you, for instance, if we can apply the things we're going to learn at that workshop, if we can apply other, sort of tested and true performance enhancement techniques. I'll give you one example. One might be the difference between a traditional loan and a fixed principal loan.
Okay.
This is not something that most people are even aware is a possibility. But everyone's familiar, home mortgage amortization, the principal portion is very small in the beginning and it increases over time. The goal there is that your monthly payments are stable and people can stomach that.
You can predict, then you can budget more easily if you have a stable monthly payment.
For something like a home that's it could be a 20, 30-year purchase, maybe that's appropriate. But I suggest to you there's a better alternative for something that's got relatively short lifespan, right? And that typically is an asset used in a business, right?
Okay.
A piece of equipment, piece of machinery, furniture and fixtures, whatever the case might be. Some of the most successful companies in the country, possibly in the world, will use fixed principal debt rather than traditional mortgage. So let me give you a couple for instances. A fixed principal is just what it says. The monthly principal is the same month after month after month. What changes is the interest that you pay every month. And it's true that the payments in the beginning are going to be higher than the payments at the end of life of the loan. But let me give you a for instance. You will actually pay 21% lower interest over the life of the loan if you used a fixed principal debt.
Really? Okay. I didn't know this.
You will also have overall 11% more cash flow. That's taking taxes and everything into consideration.
And cash flow is
Cash
king,
flow is king.
Right?
Absolutely.
Well, why don't business owners know about this? Does the bank present this as options, or? I
think typically loans are sold on the payment plan, right? They're sold on what can you afford
just
to
like
pay.
they do on cars.
Right,
Yeah.
unfortunately.
Right.
And
Which
so
may or may not be a good idea.
I think
right?
generally this loan is not even an alternative. And no offense to our banker friends, but they make less interest if you use a fixed principal loan. Last
Okay.
but not least, let me give you one more important statistic on that. You will find that at the end of the loan, right, say the last year, the last 2 years of the loan,
Okay.
you'll have a 33% higher balance on that loan under traditional mortgage amortization than you would under a fixed principal loan. That's a big difference. And I'll tell you what problem that creates. It rears its ugly head, I'm afraid, when you realize that now all of a sudden, maybe the amortization or depreciation has declined or been eliminated. Your interest expense, which is the deductible portion, is relatively low. And now you're faced with this large non-deductible debt payment.
Right.
So consequently, what's the tendency to do? The tendency is to refinance. Right? So
Got
now
it.
we're extending
boy.
that debt even longer.
And then that piece of equipment has a useful life, right?
Absolutely.
By the time you get done paying for it, it may not be worth much.
It may not even exist.
And you're
So
still paying for
consequently,
it.
then you see, the worst case scenario. Somebody takes that, that what's relatively unsecured debt and turns it into, refinances their building or their home or something like that, and makes it secured debt.
Something
And it's
that is
sort of a vicious circle. We really don't like to see that happen, but it happens all
Wow.
too often.
Now, let me ask you this, Bill. For business owners listening to us, and if you just tuned in, this is Peg and Pete with Business Talk. We're talking with Bill Jacob from Bottom Line CPA firm, and he's helping you with some tips on what to look for as a business owner. How often should your business owners be meeting with, if they have their CPA? How often?
Yeah, I'd like to say, there's one answer to that. I will tell you that one size doesn't fit all, and I know you know that. I mean, it's just like with you. Different clients need different levels of attention.
Right.
We have clients we see every week, every month, every quarter, but I would say minimum quarterly, because you really need to be evaluating financial performance. I think where you guys, I'm sure. Your service is very valuable to when you meet with clients and help them, manage their staff and the sales force and put processes in place that help improve
Right.
financial performance. But in our case, I think minimum, we want to see our clients quarterly so that we can help them budget for taxes, budget for debt, and make sure that there's no surprises.
That they're staying ahead of things, rather than when you do get into trouble.
Absolutely.
Sometimes it's too late.
And let's put it this way. I remember, back in the 90s, whenever the stock market was good. I mean, people would say, "Look, I'm making more money in the stock market than I would pay in my interest penalties by not paying quarterly taxes." And maybe it was true, and they could set aside the money and pay it on April 15th. But these days, you're not making any money in the bank. You're not making much money in the stock market, especially recently. So consequently, it is important not to incur those additional financial penalties and not to get behind on paying those taxes, because they don't go away. Those taxes are not dischargeable in bankruptcy. And so it's very important to stay ahead of the game, pay those taxes when they're due, and at a minimum, let's know what our tax liability is, rather than have surprises. My clients don't want surprises.
It's going to be there anyway. We might as well know exactly
Absolutely.
what it is. Right?
Yes,
Absolutely.
we don't want to run away from it. Absolutely.
And I think all of this is in the spirit of success, right? I mean, all of this is being done to help business owners succeed. And I think it's important, and I hope folks who are thinking about coming on July 23rd, that they'll consider, even if they're not a business owner, if you want to be a business owner, if you're the spouse of a business owner, if you're an employee who wants to better understand what the business owner is doing, and I will tell you that the most valuable employees are the ones who really understand what's going on in what is a very misunderstood.
I like that you
lonely
just said
environment.
that. We agree. We support that wholly. When we work with companies, we work with the team, not just the business owner, because they need to be inspired. They need to be educated and understand, because then they can help you grow.
And we do encourage our business owners to share as much financial information as they're comfortable with the employees, so the employees do understand more about some of the things that the business owners are faced with, like workers' compensation costs or insurance costs, and even lease payments. And they have really, in most cases, they have no idea how large these things are.
Yeah, and let's face it. There's I think a business owner's coach, a business owner's CPA, we are probably the few who get to see everything. Let's face it, business owners don't open their checkbook up to their priest, right?
No,
so, I mean,
no.
we're one of the few that actually can help counsel. And I'll tell you, when I got into this business, it was a second career for me, and I was excited, and I talked to my mentor at the time, and I said, so how's this business breakdown? And he said, my question was, is it 50% tax? Is it 60% accounting?
Oh, sure.
He said, no, it's 80% mental health services, right? And I know you guys see it in your role too.
Right.
When we're doing what our clients appreciate and value is we're helping them solve problems, right? Whether
Sure.
it's employer-employee, whether it's father-son, whether it's mother-daughter, whether it's two partners, it's a tough gig, and we need to understand what they're going through and help them in any way.
That's
we
a
can.
good point. That is such a good point.
Great.
And that's the one thing, if you're listening and you're saying, you know what, I know I need to know my numbers better, and I know that I need to look at my business a little bit more strategic and not from just a gut. My gut says to do this. We want it to be more factual and database.
Bill, are there any books related to financial literacy that you think would be great for a business owner to pick up and read?
I think there's many. I'll tell you one that really opened my eyes, and that was that Rich Dad Poor Dad by Robert Kiyosaki.
Kiyosaki. Uh-huh.
Yes.
I will tell you his enlightenment on the subjects of wealth and how it should be measured, and the fallacies of assets and liabilities. That's something we're going to talk about a little bit on July 23rd, by the way, because at that workshop, we're going to be talking about issues of financial freedom and how important it is to build the asset side of your balance sheet and not to be misled, the difference between assets
and
liabilities.
Personal balance sheet and your business balance sheet.
That's correct, because these issues, that's why I say it's important, even if you're not a business owner, I would say it's important to contemplate what the future holds. So, I mean, if you're a business executive, if you're looking at what a second career might be, if you're thinking about, some companies, some professions have mandatory retirement ages, and people aren't finished yet, right? They want to pursue passion, things they have passion for. So let's talk about the difference between success and
good.
And the workshop is July 23rd.
Right, July 23rd, 8:30 to 10. We're committed to getting everybody back to work by mid-morning. Come a little early to get registered because we're going to start promptly at 8:30.
And we'll have coffee.
Yeah, we've entitled it "Flying Without a Net" in praise of private business owners, because I'm afraid people, the society, the government, they demonize business owners. So it's important. I'll give you one, for instance. There was a recent article that came out from the Kauffman Index of Entrepreneurial Activity, and they talked about how that new business starts were declining. And one of the interesting quotes was that people are getting jobs because they don't want to feel the pressure of starting a business as their last resort. Isn't that a shame?
Wow.
Starting a business should not be a last resort.
No.
It should be an opportunity.
It should be exciting.
It should be opportunity.
Yes.
And I think that's what I see with our clients, that they truly are excited about what they're doing, and I think that's important. I think it's very important.
And so we should, to get a ticket for this, it's complimentary. You want to call 602-5189, 602-5189, or you can email us
at PeteMcDowell@actioncoach.com.
We're going to make it fun.
Yes, it'll be good. So when we return, we'll talk a little bit more about what's going to be in the workshop and give you a little bit more detail there.
Great.
To learn more about today's topic, call 602-5189. 602-5189. Once again, here's Peg and Pete.
And welcome back. And Bill, it's so good to have you here with us today. Thank you for being a part of our show.
Thank you. It's been fun, and I know we're all looking forward to getting together again on July 23rd for that seminar.
Yes.
So it's going to be interactive. It's going to be fun. It's going to be short attention span theater. We're not going to worry about big spreadsheets or complicated equations.
You won't make the participants do math in the room, right?
No, it's
all right.
We're just going to be talking about techniques and things that they should consider, things they want to ask their own financial advisor about.
And if you just tuned in, Bill is with Bottom Line CPA Firms, and he is doing a complimentary workshop for all of our listeners, and it will be on July 23rd from 8 a.m. to 8:30. We're going to do a check-in and get coffee and some bagels, and 8:30 to 10 is the workshop. So we appreciate that.
Right. Now, you mentioned Rich Dad, Poor Dad, and that was a Robert Kiyosaki book. That was a very good book. And the gentleman who was the rich dad was Keith Cunningham, right,
Sure.
Peg? And we saw him speak a few years ago down in Texas or somewhere down south. And he was excellent. He was just outstanding.
And
Fascinating
Keith Cunningham trained Robert Kiyosaki.
He was the rich dad.
Yes,
Yeah.
in that book. And
Yeah.
so that's where that came from. And Keith Cunningham has a great book also called Keys to the Vault, which is a really good book.
If you're thinking about raising money for your company or getting a big loan, it is a great resource.
We
that
give
book
people
is.
that as a resource. And then also, if you have teenagers, they have a Rich Dad, Poor Dad teenager version, right, Pete? You had your kids read that.
I had the kids read Rich Dad, Poor Dad, the boys. And then one thing I just bought a few days ago is a couple of copies of The Richest Man in Babylon, which I think is a great book. You've heard of that
Yes,
book.
absolutely.
I'm mailing it to my oldest son, Ben, who just graduated from medical school. He's just got a real job as his residency has started in Chicago. And I'm sending it to him, and one of the things I am encouraging him to do is to take a percentage of his income and start saving it, even though it's lower than it will be when he actually gets done with the residency. Start saving right now, putting money away now.
Right, and I think that's not only is it touched on in his book, but we'll touch on it on Tuesday the 23rd. I think it's important to realize that financial freedom can be achieved whether you have your own business or you work for someone else. The important thing is to concentrate on your assets. And assets are going to make you money, and ultimately it will lead to wealth, and it'll lead to independence and financial freedom.
Right.
Oh,
right. We want to look at that P&L, right, every month, hopefully.
Right.
And then we also want to look at that balance sheet. And our job as coaches is to help people create more time and to help people become wealthier. But we also want to generate profit, but we also want to improve that balance sheet month over month, hopefully quarter over quarter, year over year.
Right, and I've heard you guys talk too. I mean, it's a quality of life issue for these business owners as well. It's not good long term to be stressed. It's not good long term to be in debt. It's not good long term to be burdened by, what I've referred to before as the self-employment, complexities. So consequently, we need to let them achieve this financial freedom. We need to help them really pursue what they got into business for in the first place, right? Which was the passion to serve, the passion to build.
Yes,
So
right.
that's
That's what it's all about.
right.
That is so true.
So we talked about major purchase of equipment. We talked about possibly buying a business. What are some other big events that business owners might run into that you think they would need a little bit more advice than they might normally get?
Well, if I may, what I suggest to you sometimes is that they get in the trap of reinvesting solely in their business.
Oh, yes.
Oh, sure.
This is a good one.
It is important that they have diversification because no one's promised tomorrow. We don't know what the future holds when it comes to technology, health issues, even legislation, right, and regulation.
Employee, lose a key employee kind of thing.
So I think the employees are better served by having a business owner who is well diversified, because we don't want all our eggs in the one proverbial basket, right? So we and too often I'm afraid that they're not getting that advice. Maybe from maybe the banker's debt is served best if there are no other assets but the one generating income to service the loan. But I think if we're serving the client, if we're serving the individual, if we're serving the business owner, the taxpayer, you might say that we're looking on their best interest is diversification.
So give us an example of someone who did well at that.
Well, I think it's somebody who concentrates on the asset side of the balance sheet, right? Whether it's their personal balance sheet or their business balance sheet. I mean, we want to generate assets that create income. It was Buckminster Fuller, if I remember correctly, who came up with the solution that wealth is measured in days, right? Wealth is measured in time, not necessarily in dollars. So can our how much income can our assets generate to more than cover the expenses we incur and our liabilities demand.
And for how long?
So consequently, can we, if we have a disruption in our life, right? And that goes back to that diversification. Maybe we lose our day job, or maybe we have a downturn in
or if
in
you're
the
sick
business.
for a couple of months.
Exactly.
This happened to one of our clients a few years ago.
Yeah. So what's in place to make sure that we can survive those kind of situations? And I think wealth is truly a measurement of time and survivability.
And we're going to talk about this at our workshop. If you just joined us, this is Peg and Pete with Business Talk, talking to Bill Jacob with Bottom Line CPA Firm, and you're going to be doing a complimentary coaching session or workshop for us on July 23rd from 8:30 to 10. You need to give us a call at 602-5189. 602-5189 to register. Leave your name and number. We'll call you back just to confirm, and you can dive into this a little deeper. And Bill has promised you. I've heard the promise of fun and entertainment. We're not going to put spreadsheets out. We're not going to make it painful. It's going to be a wonderful educational experience, and you're going to be filled in the room with other business owners.
Yeah, I think
people
most certainly there are going to be like-minded people there. You'll be in good company.
Yes.
Great.
Let's put it
Great.
that way.
It'll be fun.
And as much as we can, right? I mean, it's tough when you're talking about these heady issues, but these are so important to success. I think financial success, business success. We're looking at the end of the day, right, to reduce risk for the business owner because we want that business to succeed. It's in everyone's best interest. It's in the best interest of the owner, of course. It's in the best interest of the employees.
That's true.
It's in the best interest of the vendors. It's in the best interest of the customers. So let's have a successful business. And
and
how
all
do
the
we
families involved with all those folks. I mean, you're touching thousands of people.
Certainly, and that's why I say. I mean, when you look, you've heard of Maslow's hierarchy of needs, right?
Right.
I'm going to present Jacob's hierarchy of risk. I think we're looking at, there's so many people in society that don't work. There's a lot of folks who do work, and there's very few who create opportunity, right? And those are the ones that are the risk takers. Those are the ones that are building the business. They get the credit, in my opinion, because they're taking the risk. They're the ones, if they don't pay the debt, they take their house.
Right.
If they don't pay their taxes, they get their accounts garnished. These are things that, they won't go away with bankruptcy, and there's no safety net, right? So it's very important that these businesses succeed. They create opportunity, create jobs. It's good for them. It's good for the employees. It's good for the country.
Whole country.
Absolutely.
And more than half of the jobs generated in the country are small to mid-sized businesses. That's where the wealth is created.
And if you want our help, because like Bill said, we are here to help you succeed. Now, Bill, if they want to personally call you, what would be a phone number and a website address?
Our web address is bottomlinecpa.com, and our phone number is 614-408-8354. That number again is 614-408-8354. And I will tell you, it's important. Don't let your financial advisors just concentrate on the upcoming deadlines. Let's concentrate on financial performance. Let's concentrate on the things that will improve your bottom line, that ultimately will make all these financial matters successful.
And this education can be fun as well. There's no reason it has to be painful.
Yeah.
Some of these books are a great resource. Bill will be a great resource on the 23rd.
Well, and I sure appreciate what you guys make available for your clients, your listeners. We're going to have fun on July 23rd at the morning seminar. We promise to get everybody back to work by mid-morning.
Yes.
We'll have a great day.
And again, if you want to call us, it's 602-5189 to register. That's 602-5189.
Right. That's it.
That got. And then, Pete, what's our email address?
The email address, the best one would be PeteMcDowell@actioncoach.com.
And so, Bill, we want to thank you. We could keep going on and on about the scorecard that is your business. So we appreciate your time and your insight to this and appreciate your upcoming workshop.
We're looking forward to it. We'll have a lot of fun. And there's so many issues that we can chat about that lead to financial success.
Wonderful.
Thank you again.
Thank you.
This has been Business Talk, your business, your success, with Peg and Pete, sponsored by McBurley LLC. The opinions expressed were those of the participants and may not be the views of the staff, advertisers, and owners of this station. Advice given was not intended to replace that of your business advisor. For more information about the topics discussed today, call 602-5189. 602-5189. Tune in next week at this time for more Business Talk. Your business, your success.